Thanks for clicking. The Bank of Canada will do whatever it has to do to tame down our inflation rate, even if it means sending Canada into an economic recession and correcting our real estate market. This was the message coming from Benjamin Tal from CIBC in an interview conducted right before the Federal Reserve raised interest rates by 75 basis points.
You're next.
Indeed, with the Fed raising interest rates by 75 basis points, it all but seals the deal that the Bank of Canada will be following suit in their July rate announcement. A 75 basis point rate hike would bring our policy rate up to 2.25%, or 2% higher than it was just a few months ago in February.
Oh, you.
Yeah, with the US inflation rate sitting at 8.6% and Canada sitting at 6.8%, the central banks have signaled they are going to do whatever they have to do to get inflation under control, regardless of the economic damage. This was the message coming from Benjamin Tal's interview. So what I want to do today is go over Tal's interview with the Financial Post, look at the predictions he's making for how high the Bank of Canada will go for the rest of the year, and then take a look at some of the predictions he made in 2021 to see how seriously we should take his predictions for 2022. We'll have a better idea of the Bank of Canada's intentions when we get Canada's inflation rate next week. We will have updates out on this channel on that inflation rate. Click like and subscribe to get those updates. But for now, let's get into this interview. On to the interview. Tal begins with the premise that we've talked about so many times on this channel, that the Bank of Canada is not attempting to bring down the inflation rate in short order. Rather, they are trying to ensure Canadians that they are going to bring down the inflation rate. They're trying to influence expectations.
It's all about what's in your and my head, namely inflation expectations. The Bank of Canada, the Fed, is fighting any trajectory of higher inflation expectations.
Yeah, we've talked about this before. The bank wants Canadians to know that they will be bringing down the inflation rate, at least at some point. They want to ensure that Canadians don't spend now because they think it will be cheaper than having to spend in the future. Tal then goes on to say that the central banks, the Federal Reserve and the Bank of Canada, have established themselves as inflation fighters for the past 40 years, beginning in the Volcker period, which very well helped to keep a lid on inflation for the past 40 years. As people expected, it was entrenched in their expectations that the central banks would do what they had to do to get inflation under control.
The Bank of Canada, the Fed, established their reputation over the past 40 years as inflation fighters. They're not going to toss it away. All of a sudden, it's not only 50 basis points, it's 75 basis points. They want to make sure that inflation expectations remain relatively low, because the minute they go up, it's very difficult to fight.
As such, Tal says the Bank of Canada and the Federal Reserve are going to do whatever they have to do, even if it causes a recession, to tame down inflation expectations.
Bank of Canada, the number one priority is to fight inflation, even if it means taking the economy to recession, even if it means a correction in the housing market. Their number one priority is inflation, and what's in your head, what's in my head, inflation expectations.
The central banks are getting so aggressive in their attempt to influence inflation expectations that Tal says they very well risk overshooting the mark, going higher than they need to tamp down inflation. And he says that the Bank of Canada very well could go to 3.5%, or 200 basis points higher than they are now by December of this year.
So the likelihood of overshooting, moving to 3.5, has risen over the past few weeks.
The main question being asked on this channel and elsewhere is that as this rate hiking cycle goes on and we start to see a major economic recession, if we start to see a major economic recession, will the Bank of Canada reverse course regardless of the inflation rate? Will they back down to avoid a recession? And Tal says that the answer is a resounding no. But lots of experts have offered opinions in the past and been wrong.
Bear Stearns is fine. Do not take your money out.
In all seriousness, though, Tal offered a number of predictions in 2021 for the Bank of Canada, for our real estate market, many of them very conservative for the time, and a lot of them have already come true. In November 2021, Tal warned about rising interest rates, saying we could see them rise to 2%. We're already at 1.5%, and 2% is just around the corner. And then in July in 2021, Tal warned that the housing market was going up so much that a 1% increase could cause a real problem. He again warned about variable rates and what rising interest rates could do to homeowners He made that warning in November of 2021, and now we're seeing that 18% of homeowners are worried about rising interest rates and may have to sell their home. So when Tal says that we could be seeing a 3.5% policy rate by the end of 2022, I think we should take it seriously. Experts are wrong quite often, and Tal definitely doesn't have a crystal ball. He hasn't always been correct. But I think Tal's shown in the past that he's fairly conservative in his estimates, in his predictions. If anything, he was too conservative in thinking that rates were only going to go to 2% during this rate hiking cycle. And as we've seen, we're already there, and the bank is showing no signs of slowing down. So I think it's very possible that Tal is right and that we could be seeing 3.5% policy rate by the end of 2022, which would definitely put a big strain on Canada's real estate market, on our housing market in general, and on the policy and on the rest of the economy as well. But Tal is saying, and I think we're going to see more and more experts, more and more rhetoric out there agreeing that the banks are the central banks, the Fed, the Bank of Canada, the ECB, the Bank of England are all going to get very tough on this inflation rate going forward. And I think they realize that the biggest enemy is the hyperinflation. That's the biggest worry, and they're going to do what they have to do to get it under control. Very much in the same manner that Volcker did in the 1980s. I don't know if we're going that high. I don't panic. I don't know that we're going that high. But I think they're not going to be tepid about these rate hikes going further. I don't think they're going to take a wait-and-see approach, at least for the remainder of 2022, and that's definitely what Benjamin Tal was saying in his interview. With that said, we'll obviously have updates out on how the Bank of Canada proceeds going forward. If you want to get those updates, make sure you click like and subscribe, and thanks so much for watching.